Ray Dalio. A new terrible financial crisis is coming. Shocking news. What is the risk of the major financial meltdown and recession in the global markets before the end of 2024? Hey, welcome to my channel, Money Invest. First and foremost, Ray Dalio predicted the 2008 financial disaster. Then he predicted that the COVID epidemic will cause years of long-term financial burden on the US economy. Now the 72-year-old billionaire investor who built Bridgewater Associates into the world's largest hedge fund is predicting a new economic disaster, and he wants you to be ready. A financial crisis causes so much damage because people rely on financial institutions every day. Banks provide debit cards to make it easier to pay for things. Pension providers assist us in planning for the future, and insurance companies provide coverage if our belongings are damaged, lost, or stolen. Before we go any further, please subscribe to our channel and click the notification bell to receive updates on future videos like this. So, without further ado, let's discuss the impending new and horrific financial crisis. Ray Dalio claims that the same thing will happen over and over again. There have been some lessons learned, and everyone is more hesitant to take on debt. And lenders are similarly hesitant to lend. And in 10 years, there will always be, we don't have the same shadow banking system we had previously. We don't have many hazards as we did previously. It had only happened once previously, to the extent in 1929. There were both times when interest rates were zero. And as you may recall from 1982, as an instance, the main difference was, of course, interest rates. They were on a high. However, if you look at the economic slump, the unemployment rate, and even inflation, one could claim that the crisis was similar in those ways. When the United States defaulted on the monetary system in 1971, despite a pledge to deliver gold, the entire system collapsed. You had a significant depreciation, but in those events, there wasn't a run on the entire system that threatened to bring everything to a halt. We were on the brink of disaster in 2008. There is no such thing as precision when the moment comes. When you see a self-reinforcing contraction, you must stop it. I'd want to draw attention to the parallels. In 1929 to 32, there was a major debt crisis which caused interest rates to fall to zero. This necessitated a big amount of money being printed. This resulted in a significant increase in the purchase of financial assets. The same thing happened in 2008 and 2009. Large purchases of financial assets caused financial assets prices to skyrocket, causing the economy and stock markets to recover. However, because financial asset prices rose so dramatically, it benefited the wealthy disproportionately to the poor, resulting in a large wealth gap. So that's where we are now, up until the 1940s. Yes, as a result, populism emerged. The wealth disparity today is the same as it was in 1935 to 1940. With the financial disparity, you created populism all across the world. Today, populism is being produced all over the world, and there has also been international strife. Germany's and Japan's emerging economies were stronger. It resulted in an economic rivalry between the United States and England. Because there were strongly nationalistic populist leaders, the economic rivalry over the next 10 years resulted in war. We are currently engaged in economic warfare. We are nearing the end of an expansion. Expansions do not last forever. I'm not sure if this will endure 2 years, 3 years, or 4 years, but asset prices are extremely sensitive to interest rate movements. What could possibly go wrong? I feel that we must avoid an economic slump because there's a political polarization between the rich and the poor. If we have so much tension now, we'll have far more if there's an economic slump. Furthermore, the capacity of monetary policy to loosen is lower than it's ever been. This is due to historically low interest rates, not only in the United States, but also in other industrialized countries such as Germany, Japan, and Europe. There isn't much room for interest rates to fall. Effectiveness of quantitative easing will be reduced in the next round because most of the assets have already been purchased and the asset price effect has already occurred. When a crisis strikes, the after effects might last for years, based on historical instances. One estimate puts the total economic cost of a typical financial crisis at roughly 75% of GDP. That equates to £21,000 for each person in the United Kingdom. We love your enthusiasm, so don't forget to subscribe to the channel and click the notification bell to be notified of new videos. And keep watching the 3 financial crises in the 21st century. 2001 to 2002, the Argentine economic crisis. Since the Great Financial Panic of 1876, Argentina has been plagued by crisis. From 2001 to 2002, the country underwent its first crisis of the 21st century, which included a currency crisis as well as a financial panic. The Argentine peso is in shambles as a result of a failed hard currency peg to the US dollar. When the Argentine government flirted with the deposit freeze, bank depositors panicked, forcing interest rates to skyrocket. Argentina's government lost access to financial markets, as did private Argentine financial organizations. Many firms went bankrupt. Some foreign banks, which had a significant presence, withdrew rather than jeopardize their assets. Interest rates were irregular and severe, making it nearly impossible for any financial institution to perform properly. Argentina's government fared no better, with the economy in a tailspin, huge unemployment, and no access to credit markets. Argentina's government defaulted on a $100 billion loan. In other words, the government abandoned investors who had purchased Argentine government bonds. The 2007-2009 global financial crisis. The global financial crisis of 2007 to 2009, often regarded as the biggest global economic catastrophe since the Great Depression, began in the United States and expanded to the majority of the industrialized world. Much has been written about the nature and causes of the Great Recession, but the key tale revolves around major investment banks that overleveraged themselves with mortgage-backed securities, MBSs. In Europe, there were multiple bank failures, including Royal Bank of Scotland, which reported a $34 billion loss in 2008. RBS was one of the banks that needed to be bailed out by the British government with a $63 billion bailout package. The United States had a recession in late 2008 and early 2009, but it took many months for worry to spread to Europe. Greece, Ireland, and Portugal were among the hardest hit. The impact of the financial crisis, however, was not restricted to the United States and Europe. According to the World Bank, global GDP, which measures the total output of goods and services for all countries, fell to a minus 1.67% in 2009 from 1.85% in 2008. 2014 Russian financial crisis. The Russian economy, led by Vladimir Putin, expanded significantly in the first half of the 21st century, thanks in large part to the thriving energy sector and soaring global commodity prices. The Russian economy became so reliant on energy exports that the sale of oil and natural gas accounted for about half of the Russian government's revenue. However, global oil prices plummeted in June 2014. The average price of a barrel of oil fell roughly 40% in 6 months from the previous $100 level. The drop below $100 was notable since that was the amount that Russian officials calculated was required to maintain a balanced budget. Putin aggravated the energy crisis by invading and annexing Crimea from Ukraine, which resulted in economic penalties imposed by the United States and Europe. Goldman Sachs and other major financial firms began to withdraw capital and cash from Russia. The Russian government responded by engaging in aggressive monetary expansion, resulting in massive inflation and crippling losses for the Russian banks. As a result, the United States, Europe, and other countries imposed economic penalties, including a prohibition on purchasing Western technologies to develop oil. Other penalties included preventing Russian banks from getting capital in Europe or the United States. The crisis and sanctions had a huge impact on the Russian economy. GDP fell by minus 1.97% in 2015 compared to the previous year. And that's it for today, guys. I hope you enjoyed this video, and if you did, kindly let us know in the comment section. Don't forget to like this video, subscribe to our channel, and smash that notification bell so you don't miss any other fantastic content like this from us. Thanks for watching. Until next